Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to be talking about Bollinger Bands combined with price action, a strategy that can give you clear signals for market entries and exits. Stay until the end to learn how this approach can help you identify key market movements and improve your trading decisions in any market condition. So, without wasting any much of your time, let's get started. First of all, let's talk about what the Bollinger Band is. So, the Bollinger Bands are a technical analysis tool designed to measure market volatility and identify potential price movements. They consist of three lines: a middle band, which is a simple moving average, and two outer bands positioned above and below the middle band based on standard deviations. As you can see on our chart, this is the Bollinger Bands, and the middle band is the simple moving average. These outer bands expand during high volatility and contract during low volatility, giving you insight into market conditions. When prices touch the upper band, it may signal overbought conditions, while touching the lower band can indicate oversold conditions. The interaction between price action and Bollinger Bands provides valuable clues. For instance, when price consistently push against the upper or lower band, it often signals strong trends. Just like you can see here, this is a strong bullish trend, and you can see price riding on the upper band, and this signals a strong bullish trend. Conversely, when price tightens into a squeeze, it suggests reduced volatility and the potential for a breakout. So if you look at the squeeze, we have a squeeze here, have another squeeze here, we have a squeeze here also, so this indicates reduced volatility and the potential for a breakout to either direction. This here is a squeeze, this right here is a squeeze, and I can go on and on, but I think you understand. This is a squeeze also, this is a squeeze, and these are areas of low volatility. So Bollinger Bands are not standalone indicators. Combining them with price action analysis enhances their effectiveness. Observing candlestick patterns near the band, such as engulfing candles or pin bars, can confirm signals and improve your decision making. This approach ensures you're trading based on reliable setups rather than random fluctuations. So let's talk about the Bollinger Bands price action trading strategy, which is our topic for today. To trade using Bollinger Bands and price action, the first step is to identify the market context. Determine whether the market is trending or ranging. Are we in an uptrend, are we in a downtrend, or are we in a ranging market? For example, in this market, you can see that we are clearly in an uptrend overall, and we should be looking to take buy trades, more of buy trades than sell trades. Sell trades will just be for the short term, for pullbacks, and that is the first step. Look at the market context. Are we trending or are we ranging? Bollinger Band work well in both conditions, but your approach will vary. In a ranging market, prices often bounce between the upper and lower bands. In a trending market, prices may walk along one band, signaling momentum in that direction, just like I said initially. And if you want to take trades, in a trending market, focus on breakouts or pullbacks. When the bands squeeze tightly together, it indicates low volatility and often precedes a breakout. So you wait for confirmation from price action before entering a trade. This is in a trending market. So you can see here we have the squeeze. So you can look out for price action breaking out above this area. For example, remember the first step is look at market context. Where is our order blocks? Where are we expecting price to move to, or where is price coming from and where is price going to? So that's the first step. As you can see here, we have price giving a break of structure to the upside, meaning that we are expecting a push to the upside. We have price pulling back to retest the order block sitting here. See this pin bar right here. That's another block, and price reacting from this area, and at the same time we are having a squeeze. We have this Bollinger Band squeeze right here in the middle of this reaction from our order block, and you can see after that squeeze we have price breaking out of the Bollinger Bands here, closing above the upper band. So this can signal an area to enter our buy trades. We can also see the 3 inside up candlestick pattern here, which is this red candle and 2 bullish candles with the second bullish candle closing above the first candle. We've talked about these candlestick patterns in our channel, so you can just go through our channel and you see these videos. Ensure you watch them and study them. So this is the trend side up candlestick pattern. I could just look to take our buy entry as we have this. No, after the squeeze actually, as price closes above the Bollinger Bands, we just take our buy entries, our stop loss below this low, and our take profits at previous resistance levels like this one, or we could just set our take profit at 1:2 or 1:1.5, depending on your risk to reward preferences. So this is another example. We have the continuation here. Like I said, here's the continuation, another continuation, and this is your order block. We expect price to react off of this zone, and we have price reacting off of this zone. This is our liquidity that was swept to sponsor this push to the upside, and you can see the squeeze. We have the squeeze right here, and we have this false breakout. But remember, we are trading based on market context. We are trading based on price action, the Bollinger Bands price action strategy. So we have this false breakout, this red candle breaking out below the lower band, which can signal to traders to sell. But since we are trading based on price action and we know the market context, we know that we are bullish, and this is another block that this price is reacting from. So we should just wait and confirm our trades before taking any entries, but we won't take a short trade. So that is the essence of price action and checking for market context. So we can wait. As you're seeing, we have this gap signaling that buyers are stepping into the market, and we have price also filling in the gap right here. Had the gap, price filling in the gap and continuing the push upwards, leading to a market structure shift also. So we just look to place our buy entries at the close of that candle, and our stop losses below this low, and we have our take profits all the way up. 1:2 risk reward ratio, or you could just target previous resistance levels like this one. So that's how I would have been able to take this trade based on the Bollinger Bands and price action. And also for pullback in trends, this is another way you can trade using the Bollinger Bands and price action. For pullbacks and trends, watch how price interacts with the middle band, the moving average. In an uptrend, if price pulls back to the middle band and forms a bullish pattern like a pin bar or engulfing candle, it can be an opportunity to enter long trends. While in a downtrend, look for bearish patterns near the middle band to enter short trades. So let's quickly look at this. I'm going to delete this. Now you can see price here, we are bullish, clearly bullish. So like I said, you should always monitor the middle band. Sometimes price likes to just pull back to the middle band, which is the moving average, and use it for dynamic support or resistance. In this case scenario, this is the bullish trend, so we are looking at this as support. You can see the squeeze here. We also have a tiny squeeze here, indicating to traders that we are expecting a breakout to the upside or to the downside. Here we have a breakout to the upside, which is this green candle right here, and we could place our buy trades. But that is not what we're talking about right now. We're talking about pullbacks into the middle band, as you can see right here, and from there you could look for candlestick patterns, like you have this pin bar, series of pin bar candlesticks there. So you just take a buy trade from there with your stop losses below that low, and you'll take profits all the way high. Remember, we are in a bullish trend, and this was just a pullback. So it's just a pullback, and we're able to catch it based on price reacting off of the dynamic support provided by the simple moving average. So that is that for that example. Remember to always set your stop loss just beyond recent support or resistance levels to protect your trade. For take profit targets, aim for key levels such as previous highs or lows, or using trailing stops to lock in gains as the trend continues. Alright traders, we've come to the end of today's video. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.